Well, hey, yeah, welcome to another episode of the Brand Builder Show. I'm super pumped for today's episode because joining me is Daniel Little from LinkMyBooks. Daniel is a good friend and he is someone who has excelled in this brand building journey. He started with £750 on a credit card for his first inventory to build his first brand, built that up over 2 years, sold it, and then invested the money in another brand, built that up and sold that one too, and really just has created an incredible life for him and his family because of going on this brand builder journey. Today, we're going to dig into how he did that, talk a bit about that journey, and then also talk about what he's doing now, which is helping Amazon sellers with their bookkeeping. And he is going to give you some great insight into how to make sure you keep your finances clean, all in order, nice and actionable, giving you insight into your business. So it really is an episode that's jam-packed full of brand building insight. So make sure you do stick around to the end. Without further ado, let's get into the episode. Awesome. Well, welcome to another episode of the Brand Builder Show. I've got my friend Daniel here with me today. Daniel, thanks so much for coming on the show. I'm excited to dive into your journey. Daniel, you are a former brand builder, built your brands on Amazon and now doing something slightly different but still related. Give us a little bit of a background before we get into what you're doing now. Give us a background into how you got started on Amazon, how you found the world of e-commerce, and a bit of your early journey with that.
So my journey probably started when I was in school, to be honest, when I used to buy multi-packs of cans of Coke from the shop and then sell them from my locker. Always had that like entrepreneurial spirit. And then I think that sort of like grew into, I had a little eBay shop and I used to buy things in like Poundland and then sell them on eBay when I was a kid. And then as I got older, I sort of like got into the role of, you have to have a job, and got a job instead. But I was always a salesperson at heart, and I think the entrepreneurial thing was always like burning in the background, and I knew that I would eventually make my way back to it. And I had a mate who sold phone cases on eBay and Amazon, and I was asking him a little bit about his business, and he was like, "Oh, you should have a look at this new private label thing. It's like the new thing." And so I looked into it and found Amazing Seller Machine, the course, which was around like quite a long time ago, and I did that. Basically I paid, and I still remember this day like sitting up on the webinar and thinking like, oh, there's no way I'm ever going to pay $5,000 for this course, and then went to bed and sort of like told my wife like, oh, I'm sorry, I actually did pay it. And she's like, what? And I sort of do look back now and joke about that now and say like that was, even though it was extremely naughty and I shouldn't have done it, that it was probably one of the best decisions I ever made like on the spot, because it did drastically change the path of my life, so to speak. So I went from having like a pretty good paid job. I was a medical rep, so I would sell drugs to doctors, had a nice flashy car and earned plenty of money, and I went into having this as a little side hustle. And so sort of started my first product. This was like back in 2015. And I sold something in the swimming niche. It's probably as much as I can give details on. And I built that up for probably 18 months still, just alongside working at my job, and then sold that business and quit my job at the same time, knowing that, right, okay, this is going to be something that I can definitely do, so I'm going to sell the business so that I've got some cash to be able to like put away as a safeguard. I quit my job, and that's already started like the next brand at the same time. So then I went into the fitness niche. And I started with like a family, friends, and investor as well, so that I could use some of my pot and some of his pot, and we started building that one up. And then built that up from probably 2016 to 2018, late 2018, and then sold that one in 2018. And basically, like, we built that up much, much bigger than the first one because we had more cash behind us, and also because we just launched more products. Basically, with more cash flow, you could launch a lot more. So we had stuff in fitness, we had stuff in beauty, we had stuff in camping. We didn't really go after like a particular, like, I know people like this whole build up a brand and like keep your items within that brand. We were like totally scatterbrained. Like, where's the profit? Where's the best items that you can make the most return on investment on? Right, we're going to start a brand in that category. And so we eventually ended up with like 4 brands in 4 different categories. And they probably had like a handful of products each, like 6 or 7 products.
That was selling on Amazon in 2016 though, right? That's, I think it's become a lot more popular, the idea of building a brand now, because you have to stand out. But 2016, the opportunity was, like you said, launching as many products as you can.
Yeah, I know, and I think it's a fine line between sort of diversification, so you're not all stuck in one brand, but then also if the aim is to sell the company, like I know we probably could have got a bigger multiple if we'd had like a more concise brand. So I think that our buyers liked the fact that we had multiple brands, but I think they would have probably preferred to have like one big brand with like lots of multi-sell items. But to be honest, I've never really agreed with the common sense that people say like, oh, if you have a big brand with lots of products on Amazon, then people will buy multiple of your products, because that's not really how Amazon sellers, like Amazon buyers work. They search for something and then they buy one of the first three results. That's the typical flow that they would go through. So just because you then also sell something else in that niche, unless they're looking for it, I don't think they're going to buy it from you.
Yeah, I mean, I think that obviously there's some products that if you're going to either reuse them or buy more of the same type of products, they may come looking for more similar things. But if they're unrelated, then yeah, definitely not. So it's, I think, yeah.
Yeah, I think that if you can build up some sort of list, but I think obviously it's harder and harder to do that because Amazon don't want you to have any of the customer information, do they? So.
Yeah, you were selling on selling on Amazon the times when we call it the Wild West. You know, anything was possible. So it's
yeah, the super URL generation.
Pay for reviews and all that kind of stuff. So.
Oh, I never paid for reviews. Like, no, I think that I always knew that I was going to sell the business, and so I always knew what was white hat, what was grey hat, and what was black hat. Black hat, never ever touched it, because if you do that, then you have to disclose that as part of your sale. Otherwise, you're a nasty person, I guess. And if you do that, then as any buyer in the right mind is just not going to touch anything where you've gone against Amazon's rules. I know that my buyer specifically looked into our health status of our accounts and all of the performance notifications that we'd had, and I think that most savvy buyers would. So if you've had multiple instances where you've been told off for something, or you've had accounts banned and that, then you're going to find yourself struggling to achieve the multiples you want and be able to explain yourself.
True. Yeah, because I think the rules changed around 2016, right? Because you used to be able to send free products for reviews, but you would have come in, especially that bigger brand after that was made, not allowed.
Yeah, so I think that I maybe brushed the lines by getting family and friends to purchase the item and sort of leave a review. And I think that's now even been categorically told, no, you can't do that anymore. But back in my day, it was I think that was a bit of a grey area.
Yeah.
So I think that they always said you can't give a free product for a review, but my friends and family didn't. They bought it.
Yeah.
So I just said, I've launched a new product on Amazon. Would you mind buying it? And if you like it, leave a review.
Yeah.
So
no, that's good. Good.
It'd be hard for them to find you on that one.
Yeah, for sure. So that second brand then, I don't know how much of the detail you're able to go into, but in terms of start and capital, you're able to sort of talk roughly how much you got started with?
So it wasn't a huge amount, to be honest. I think took around £50,000 from the family friend investor, and then put the same of my money in as well from the pot that I'd sold. So we started with 100 grand, and we launched 3 products right out the gate. And I think that pretty much the 100 grand, most of that was taken up on initial orders and getting packaging done and stuff like that. And then we just basically every quarter tried to launch 2 new products.
Yeah.
So we always aimed to have a hot list of products where we would just have products that we knew were going to be ready to go as soon as we had the capital to support it. And we'd already had samples through. We just thought ahead basically. So instead of getting the product, getting it in Amazon, launching it, is it doing well? Yep. Okay, great. We just assumed that was going to happen so that we could grow faster.
Yeah.
And I think having the capital behind you to be able to do that, and having that mentality of reinvest everything is definitely something that has helped us to grow quicker. I mean, if you take the first brand, I started that on a credit card, and I put the first order was £750 on a credit card, and I remember it to this day. And so that is zero capital.
Yeah.
But that in 18 months, I had 1 product, and it had 6 variations of color, but I still only had 1 product. And so that's the difference between having the capital to be able to scale quickly and add new products and not. So I think that was always as soon as I saw that it was a good thing to do, private label, I straight away had that mindset of, right, okay, how do I build more capital? And I'd heard people on podcasts talking about oh, you can flip these businesses quite easy. So I thought, well, I wonder if I just build this up big enough and have it running for long enough that I can then generate a pot of money to then get going with the next thing quicker. So
Yeah.
it worked.
And I think that's, I mean, great wisdom and great strategy. I think that's definitely a good perspective, though, because I think if people that are newer on this journey, you say, "Oh, I put 100 grand into it," a lot of people would think, "Flip heck, I ain't got that kind of money." But then to hear the first stage of the journey, well, 700 quid, to get the first one going, and that's what it's all about, right? You built that up, you capitalized on it, liquidated that, and then went again. But you must have been confident on the business model to go again.
Yeah, exactly. And that's exactly the point. It's like, it's not that you can't build these businesses. It's just that it depends on how fast you want to go.
Yeah.
So if you are someone who doesn't have that type of money, then don't be put off and think like, oh, well, I definitely can't do this. This guy had it with 100 grand. I think that it doesn't matter really what your pot of money is. I would say as long as you've got like, between £1,000 and £3,000 at least to be able to begin with, to be able to like put some into stock, put some into running your either Facebook ads or sponsored ads, or doing some like promotions through Google or whatever, just to be able to get the business up and off the ground. I think if you go into it with the mindset of, I'll just buy stock, I'll use all my money for stock, and I'll just put it on Amazon and it'll sell, the other people who won't, I don't think it'll do very well. So I think now it's so much competition, it's really hard to get sales without any sort of promotion.
Yeah, definitely.
But it's definitely possible, and I think that all the first business taught me was that exactly that. It's cash flow is the problem. So like, I was lucky enough to have a job on the side, so I didn't have to take any money out. So every time we made profit and sold, it was just literally putting it back into inventory.
Yeah, I was going to ask you about the job actually, because you mentioned it was a good paying job, you had a nice car. So for you, money can't have been the only motivation for starting this business.
No, so I think, as I said, it's like I've always had this little burning fire of entrepreneurial spirit in the background at all times. And I think that I liked my job, and I was on like 50k a year and had a Mercedes-Benz car, and it was like, I'd just picked it and it had only arrived like 6 months before, and I loved it. But I don't know, just it didn't feel like that was it. Like, yeah, I could work in that job and I could earn probably more money every month, every year, and like build it up. But it did, I know it's like sounds cliche, but it did really feel like trading time for money. And I think that people say that a lot, and like it does go like, it gets used a bit too much, but I think that it does make sense. It's like, in that job, I was earning 50k. Next year, I might have been earning 52k. Year after that, 54k. But it doesn't matter how hard I work there, I still would be on that journey. Whereas an entrepreneur, the harder you work, the more effort you put in, the more you can potentially earn. So it makes sense. It made sense for me anyway to have it as a little bit of a side hustle. And then it just became clear. I was like, this actually will probably end up earning me more money than what my job is. And when I quit, I didn't quit thinking like, oh, let's just hope. I already had a really good business plan in place, and I'd already proven the model with this first business, and we'd sold the first brand, and I'd built it up to the point where I was earning at least my salary on the side hustle. So it wasn't like I was a dim person, just like quitting and blindly going into it. So when I went into that second business, I already had, so that when I sold the first business, I'd already started the second business. So I already knew that it was going to be on the way, and would like, my product was starting to arrive at Amazon, and the promotions were starting to run, and we're starting to see sales come through. And at that point, I sold the other business. And it was that point that I thought, in order to really make this work, I'm going to have 100% focus on it, because I was like, I was working quite a lot then. I was working full time at work. I was running this business. I was selling the old business. It was like a lot going on. So I ended up quitting, and that was probably another good decision that I made, to be fair.
I think so, yeah. It definitely sounds like it.
Yeah, but I think it's one you've got to take with a pinch of salt. So you've got to be able to know that you can support your family at the same time. Like, I obviously had a wife, 2 kids, and had to be able to know that I wasn't just quitting and hoping. I was actually quitting with a bit of an idea of what was going to happen.
Yeah, definitely. Definitely. And then the journey with the second business, selling that, are you, again, able or willing, no worries if you don't want to talk about the kind of size of exit of that, or is that...
Yeah. So I think in terms, I can't talk about specifics, but the business was probably turning over in the low 7 figures per year. So, and then I sold that and achieved 28 times monthly net profit sale, basically.
Yeah.
So they put back in all of your like directors' salaries and like earnings that you've taken out of the business, so that it's literally just like your sales minus your cost of goods minus any other business expenses. But anything that's like directors' salaries or dividends or anything like that. That all gets put back in.
Yeah. And then more like, I suppose, away from Amazon, what was your thought process with that money that you made from that? Did you think, I'm going to invest this all back into business? I'm going to be super safe and put it in property. I'm going to like splash it all on Ferraris. Like, what was your, because I love the investment side as well. It's just interesting to hear, what your thought process was.
Yeah, it's funny. My thing all along, right? I'm a simple guy, has been that I want to get to a point where I can go to a restaurant and I don't have to, first of all, check the prices before I go there.
Yeah.
And I also, two, when I get there, I can just look at the menu and look at what I actually want rather than looking at the price first and then the menu item afterwards.
That's awesome.
And that is like, it's something that I regularly do now. Like if we're like fancy some food, we'll go and get food. We'll not really think about like what the prices are on the menu. We'll order what we want, we'll eat what we want, and we'll leave. Yeah. And I think that we'll also pay on the way out, by the way.
Yeah.
It sounded like a leave, yeah. But I think that for me, it's never been like, I want to earn so much money that I can have like all these cars and houses and stuff like that. And to be fair, yeah, I do now have a pretty nice car. I've got a Tesla Model 3 Performance, which I'm really happy with. Yep. I've previously had a BMW M4, and I really like that as well. But that's never really been what it's about for me. Like, I had a nice car when I had my job. Like, I got that included in my job, so it wasn't really about the cars. And like houses, like I know a lot of people like invest in properties and things like that, but to be completely honest, my money is still just sitting in a bank account. Like most of it just sits in I think I've got some in premium bonds, I've got some in like a really low interest savings account, I've got some in stocks and shares, but I really struggle with the risk. Like knowing that I can invest that money in a business and I have full control to like drive that business and be able to make more money for that money, that I'm okay with. Yeah. But putting it in like a fund where I've watched a couple of YouTube videos or I've employed like a fund manager or whatever who can say like, oh, well, this is a good fund to go into. It's still like, it's totally out of my control. Like the risk is not in my control. And I've maybe got a bit of my personality that I just don't agree with that. So I do have some money in funds and investments, but I would say it's like less than 10% of the whole pot thing. So it's probably not the wisest thing to do in the world. But yeah. So I like overpay my mortgage. So I've got two houses now, one that I rent out and one that I live in. And the first one is pretty much paid off, and the second one is like halfway paid off. Me Tesla that sits on the drive, I cashed that. I didn't put that on a loan or anything like that. So, like, I don't know, I've maybe invested in the total wrong things, but that's the truth.
I don't think there is a right or wrong, is there? I think you've got to do what's right for you, and somebody's goals are very different to somebody else's. So it's it's fascinating for me because I just imagine when we sort of cash out, I'm gonna sort of think, I need to get all this money invested, and get it out on my bank account. But you're the opposite. So it's good to hear different perspectives.
Yeah. The problem is as well that when I sold, like since then the markets have been pretty wild, if I'm honest. Yeah. So like every time I've thought, it's probably a good time to go in, and then it's like coronavirus and everything crashes. Like I've always been like, I've dabbled and then it's been like totally ruined. Yeah. And like unfortunately when I sold as well, like that was exactly the time when like Bitcoin was like the thing to do. So I put some money in some Bitcoin things as well, and that was like totally bad idea as well. So yeah, I think I've maybe been just burned too many times by little investments that I would just never. I don't think I could never take like all the money in the bank and just stick it in some investments somewhere. I just can't.
No, I get that for sure.
I'll keep overpaying my mortgage and saving 1.97% interest on me bills.
That's good, man. I think the happiness is the goal, right? And it's more than just numbers on a screen. So that's good, really good. You're talking obviously about then going on and investing in a new business. It's kind of what you've done, right? Since you sold your brand, you built something up in LinkMyBooks. Talk to us a little bit about that transition, how that came about, and the early stages of that.
That one basically was I was using one of the competitor products on the marketplace to do my bookkeeping automation.
You don't have to say it, but we all know it. Yeah.
Yes, swear word. When I was running the second brand, and I used that initially, and then when the brand like scaled and we started to get to like serious order count, then the price of that app was just like ridiculous. And I did all my own like bookkeeping in terms of putting stuff into Zero and stuff like that. I've always like liked that side of the business. And I always used to like separate things out into different accounts and that. And I always used to see that one line on the P&L and be like, you know, this is ridiculous. Like, how on earth can Zero be £30 a month? And this is like, nowhere to lie, I think I was paying like £400 a month or something like that at the time for this tool, because I had like quite a high order count. And so I always like joked about how I reckon someone will come along one day and they'll make a better, cheaper version of this. And I didn't really know at that time that it would be me.
That's awesome.
And one of the like gripes that I had with that tool was that it was just never really suitable for like the UK business. So like it was designed for like total US customer, and like they have sales tax and that's added on. And it was like something that tool did quite well. And then just for VAT, it was just, you had to make so many adjustments after the fact, and it was like, it was never right, and the accountant was always whinging that there was something wrong and I wasn't doing this and I wasn't doing that, and I was like, well, yeah, the tool doesn't let you do that, so can we adjust for that later? And it just got me thinking while I was like in the process of prepping my business for sale. I was like, do you know, I reckon like knowing now what I know about Amazon and like how it works and being pan-EU and all the VAT registrations and like knowing all that, I wonder if I could find some sort of software developer who we could work together to then make like a UK version of this app where it does the same sort of thing, but it's just more aligned to a UK business. And luckily for me, I actually had, long story short, I had a person already who was in mind called Pete, who is now my business partner. And he actually was a competitor of mine on Amazon. So he reached out to me. This is going down a total rabbit warren here. But he reached out to me and said, it basically emailed saying like, I don't really want to tell you who I am, but I sell in the same niche as you. And I believe we have a mutual competitor, and I'll not name them either, but it was another competitor that I knew of. And this mutual competitor was someone who was 100% black hat. They were doing everything under the sun black hat, like total review manipulation, like just like absolutely ridiculous, like totally brazen everything. And so we actually became friends as like a mutual friend of an enemy, so to speak. And we always like then kept in touch after that. And then I joined one of his seller groups. He was down in London, I was in Newcastle. And I went down to a few of the meetings with, I don't know if you know him, Danny McMillan from Seller Session. Yeah, so I was in his little group, and we used to like meet up in London, and that's how I got to know Pete a lot better. And when my business was coming up for sale, I then said to him, do you know, I really think, I know I've mentioned this before, but I think that we could make a better version of this other app, and we could make it specific for UK market, and we could just come in at a lower price point, because I think that we can do it for that money, and we can then clean up in the UK. And do you think we should do it? And he was like, no, it's too much work, man. He still had his business, and he wasn't planning on selling his, and it was doing really well, and it was like his was even bigger than mine. And then I sold mine, and then he realized when I did my calculations, and I told you earlier that like when you factor in that if you sell your business and take entrepreneurs relief, which has actually been capped now at £1 million, but it was capped at 10 million prior, that you could take all your money out and pay 10% tax. And I then ran a little spreadsheet and was like, right, okay, well, if I continue running my business and then take out all the profit and pay my personal tax on it, how long will I have to run this business for in order to make the same amount as what I can just get in a lump sum now? And the figure came out to like 7.4 years. I was like, right, okay, I'm selling mine. Like, there's no way I'm running this for another 7.4 years. So when I then was telling him about this at the next meeting we went to, I was like, I'm going to sell my business, and I've put it up, and it's gone up for valuation of this, that, and the other. And if I can get that, that means that it's the equivalent of me having to run the business for another 7.4 years and keep it the same without growing it. And then at that point, I could see like the light bulb ding in his head, and he was like, maybe I should do that as well. And then I like helped him on, because I thought, well, if he does that, then we can start this other thing.
Me. Yeah.
So I like encouraged him, and he ended up selling his business like 6 months after I sold mine. And in the meantime, while he was selling his, I was like scoping out the content and like trying to think of how we could work it in the UK market and how all the upgrades we could make to the tool, and like designing all the pages and stuff like that, so that by the time he was sold and ready to go, we had a concept basically. So that's how it started. So it is a bit of a weird story, really. It started out like two competitors who now have a SaaS together.
Yeah, no, that's a great story. It's a great story and a much needed tool because I was also a user of the tool that shall not be named, and yeah, it was eye-wateringly expensive. And actually, what made me sort of remember to chat to you again about getting some content made was because someone left a comment on one of my YouTube videos from like a couple of years ago when that was the only option, and I was running through how I set it all up. And they were like, "Oh, you might as well just employ an accountant for the price of that tool." And I was like, "Yeah, it's fair enough." Yeah.
Yeah.
And so that's what made me think, oh, I need to do an updated, better version with a better product on the market. So that's why we got together. But yeah, no, it's good. That's really good. So it's sort of like obviously very optimized for VAT in Europe. Can US sellers still use something like this? How does it work for them?
Yeah, so although we do like have a pretty good unique selling point from a UK business point of view, the tool LinkMyBooks does work for all businesses. So
Yeah.
we've got customers in the UK, we've got customers in Ireland, we've got customers in the US, we've got customers in Australia. The only place that I would be honest where it's not an ideal tool is in mainland Europe. And that's mainly because they don't really use Xero or QuickBooks. So like in Germany, they've got like a few other bookkeeping platforms. I actually live in Sweden now, and in Sweden they have like a couple of other bookkeeping platforms here, and we just don't integrate with them. And I think the problem is that there's 26 countries in Europe, in the EU, or 27 countries in the EU. And if we were to then look into all of the different bookkeeping systems and all of the different ways that tax works in those countries, it'd be too much work, and for a return on investment, thinking like, my business hat on again here, it's just not worth it for us. Like for us to focus on UK, US, Australia has been the way forward at the moment. And then we do have Canadian customers as well.
Yeah, nice. No, that's really good.
But yeah, in answer to your question, it does work for US as well. We do like separate out sales tax and like keep that in a separate account, and et cetera, et cetera.
Yeah.
So, but it's just, I think the value benefit that we can deliver for UK businesses especially is far, far over and above the other tools that are out there, and at a much more competitive price. So I think if you're a UK seller selling on Amazon or eBay in any marketplace, it would totally make sense for you to go with LinkMyBooks, in my opinion.
That sounds good. Yeah, no, and I would wholeheartedly endorse that message.
Yeah. I'll give you that £5 later.
Yeah, cheers, bud. Just talk to us about like cleanliness of bookkeeping, which doesn't sound like the sexiest of topics, but I'm with you. Like I kind of enjoy the Xero, the P&L, all that kind of stuff is something that I enjoy getting into. Talk to us about that, like in terms of, because LinkMyBooks, when you set it up, it helps you set up your like chart of accounts, right? And which is a really important piece of your accounting. Just give us a bit of an overview of why that kind of stuff's important, and maybe some best practices as well.
Well, I think the main reason it's important is that you need to, one, have clean accounts and be able to stand behind what you've sold, what you've paid out, and what VAT and taxes you've accumulated, mainly for HMRC. Like, you don't really want to get in their bad books. You want to be making sure that your books are as clean as possible, so that if, touch wood, it doesn't happen, but if you do get a VAT investigation, that they come in and they can see straight away at a glance, like, yeah, these guys obviously they know what they're doing, their books are super clean. That's going to put them off on the right scent straight away. They're not going to then think, oh, well, it's a total mess, how on earth we're going to work this out, and then spend more man hours thinking, we'll definitely be able to find some like problems here and make some money. Because what I've always been thinking is that the HMRC really is like a business. So they look for opportunities to recoup VAT and tax that should have been paid that hasn't. So if they come into your business and they think, no, these guys have got super clean books, everything is crystal clear, everything is like backed up by attached invoices, and they've got audit trails for everything, then they're not going to really think they're going to be able to find anything, and they're going to do like a brief investigation. But if they come in and they see that your books are a total mess and you've got like some huge expenses that have gone through that you don't even have an invoice attached for, then they're going to be asking you a million questions about everything, and they'll probably go back further. So that's the first reason. And the second reason, which I think is equally important, is if you're thinking about an exit strategy, if you're thinking about, right, okay, my goal is to build this brand up, I want to build it up to £5 million turnover, and then I want to sell it, and I want to achieve this multiple and end up with 2 million quid in my bank sort of thing, then you can say to yourself that as a buyer, when I put myself in those shoes, what would I be looking at in order to think, right, okay, what's a good business and what's not a good business? The first thing is, if I then jumped on a call with a seller who then didn't know their accounts really and didn't really have an idea of what their gross profit and their net profit was and like what their actual expenses were looking like and which marketplaces they were making the most money in, which marketplaces they weren't making money in, like I just don't know. I don't think that would give me the best impression of a business. And if I'd spoken to two and one like was like, yeah, we're making some good profits as you can see, but I'm not really sure like which marketplaces it come from. And then there was another one who like shit hot on the numbers, definitely be buying the other one.
Yeah,
And
definitely.
that's exactly what happened when I sold my second business, is that the buyers said, we've spoken to probably 30 different businesses and your books are by far the cleanest. And of course, at the time, I was like using a concept version of LinkMyBooks.
Sure.
So it was like a lot of the stuff that was in there was generated by the very, very early version of LinkMyBooks.
Was there anything in particular about that they said was clean? Was it the breakdown of marketplaces or anything in particular?
Yeah. So I think what they liked was the fact that I'd split everything out nicely. So I know you'd mentioned like we help with the chart of accounts. So our default chart of accounts would be Amazon sales, Amazon refunds, Amazon reimbursements from like FBA inventory disposal, like destroyed. Actually, can't get my words out. FBA inventory reimbursements, where they've like lost or damaged your inventory. Then we split out like seller fees, FBA fees, storage fees. Then we also split out Amazon loans if you've got any of them. We also split out Amazon reserve balances if you're getting any of them reserved at the end of the month. And then I feel like there's one that I've missed, maybe sales tax for a US side, advertising costs. And I think because we split it out into those like 9 or 10 easy accounts, it means that it's nice and easy for you to then look at your P&L and see split my marketplace when you've got the tracking categories turned on, which we do have as a feature. Then you can see like what your sales are and what your refunds are per marketplace, what your fees look like, what your storage fees look like, how much advertising you're spending in each marketplace, and how does that correlate to your sales. And in these months where you've spent more advertising, have you then generated more sales? And I think it helps you to have like a much better picture of your business. And I know that when I started to split it out by marketplace, especially, I started to identify opportunities like, why is my refund ratio so high in Germany compared to other European marketplaces? Like, I had a much higher refund rate or like percentage of like sales versus refunds in Germany compared to Italy, France, Spain, and and the UK. So then what I did was I had a look at that, and I actually worked out that the reason behind it. I sort of like asked a few customers who would message in and said, "What do you think about our?" Or they asked about refunds, and the number one thing that came back was packaging. You don't have German text on the packaging, like you just have English text on the packaging. And I made that one change. Just like I thought, all right, well, okay, well I'll put German text on, and while I'm there, I may as well put Italian, French, and Spanish on as well. And so I put those languages on the packaging, which was just like some basic stuff. And the refund rates, like following that new stock getting into the marketplaces, went down. So if I'd not split it out by marketplace and hadn't seen the difference between Amazon sales and refunds, then I would never have known that. And so that obviously then made my business more money because I was reducing the refund rates.
Yeah.
So it's just small things like that that can make a big difference. And I think that then gives you like that as an ammunition to be able to talk about with the buyers. So like when you know your business inside out and you can say, right, I already identified that some of these opportunities X, Y, and Z, and I've got a list of new opportunities that could also make you money in the future. Like they see that as a huge opportunity for them to make a good deal of money out of your business. So
Yeah.
it definitely helps to have those figures.
Yeah, definitely. That's a really good breakdown. The clarity that can bring is, the usefulness of that is something where those are the tools you love, right? That you invest in that actually bring you more money back than you're investing in them. So it's,
yeah. And that's actually what a lot of our marketing is all around now. So we used to like brand ourselves as like, oh, you can save so much time as like, instead of doing this manually and downloading everything from Amazon on eBay and like putting it into zero yourself, you can save like 6 hours a month doing this with LinkMyBooks. But now we've sort of pivoted away from that because we've realized that the vast majority of sellers who come to us, they're either doing it manually and they're doing it wrong, or they're using an accountant to do it and they're paying the accountant to do it and they're getting it wrong. And it's an opportunity not only to save time, but also to save money. So two of the biggest mistakes that people make at the moment that I see like day in, day out, is that they don't separate out sales where they're going outside of the UK. They just sort of assume that like sales that are made on Amazon.co.uk, they're going to the UK. Sales that are made on the other marketplaces, they're going to the other countries. And that's just so not true. It's like, if you've got sales that are on Amazon.co.uk, that's literally just the website the customer was on. They can be delivered to anywhere. So they don't separate those out. So you can have sales that are like, where they're putting them down as 20% vatable sales because they're just assuming they're going to a UK customer, but they're not. They're going either to the EU, and now post-Brexit, that's zero rated, or they're going to outside of the EU, like America or somewhere like that, through Amazon's global platform, and again, they're zero rated. So we actually have like a little like a tool now where once you've connected your account up, you can actually see like these common mistakes in your numbers and see how much you would have been losing if you weren't doing this properly. So that's one thing, is they don't separate out the exports. So we'll show them like, you had this many pounds of sales that were shipped to customers outside the UK. If you didn't put that down as zero rated or no VAT, then you would have lost this much amount of VAT. And that's so powerful, because then to like be able to show someone and say, you're not only going to save time by using this, you're also probably going to stop overpaying VAT, and it's just going to happen automatically. It's literally like, connect it up, connect zero, job done. We'll do all the hard work for you. So that's what we've been focusing on now. And the other big thing that people do, which is a mistake, is there's like new regulation came in January the 1st for UK e-commerce VAT. And then the same regulations then followed through on the 1st of July for EU e-commerce VAT. And basically it all comes around like where the inventory is being held at the point of sale and where it's going to. So if you're a UK established company and you are storing inventory outside of the UK, and then that gets shipped to a UK customer, like if Amazon's taking it from the German warehouse just because it was easier for them and you had none left in the UK or whatever, then Amazon is responsible for collecting and remitting the VAT, not you.
Okay,
so the marketplace actually becomes the tax liable person. So again, people just assume that like all the sales that are going to the UK customers, then I must be taxable for those. And so even if they are separating out the exports and they're not, and they're putting them down as a UK sale, then now they're paying VAT, and Amazon never passed them it, because Amazon kept a hold of that VAT and they remitted it directly to HMRC on their behalf.
See, it's all becoming clear now, because I've been seeing sales prices that are lower than they should be, and I'm just wondering why is that, and I keep meaning to look into it, and that'll be why.
It also works the other way around as well. So when you've got, if you're established in the UK and you have inventory held in the EU, or you've got inventory held in the UK and they're going to an EU customer, because you're not an established EU business, and because it doesn't matter where the inventory is coming from, then all of those sales that go to the EU customers, Amazon is responsible for the VAT. So they are collecting the VAT, they are remitting the VAT, so you don't need to be. So it's all these things where like it takes like a lot to keep on top of how all the VAT rules are changing all the time. And obviously that's our bread and butter, so we are like very good at it and stay ahead of the game. And so LinkMyBooks is doing all that work for you in the background, separating out all those sales, and then you end up with a nice clear invoice on Xero or in QuickBooks, which then line for line tells you like, these sales have gone to the UK, these sales have gone to the customers outside the UK, and they've been dispatched from Great Britain, or they've been dispatched from outside of Great Britain, and all the different tax rates are just, they're worked out. Like, so it's like it's that's what I'm saying. We've moved away now from like saying that we can save you time. Now it is literally, I reckon that most sellers who join us now, unless they have been like using some seriously complicated pivot tables and spreadsheets and like checking the VAT transaction data for each and every order and refund that has gone through a payout, they will be getting it wrong. I can almost put my mortgage on it, sort of thing. Like you can't get it right now just by using the summary sheet that comes out of Amazon. It's not possible. So you would have to be spending a lot of time and effort to be able to get it right. Whereas you could just use us and we'll just automate it, and then the fee that we charge will be more than eaten up by the amount of VAT that you'll potentially see. And that's the new idea now.
Yeah, no, that's really good. And just a quickly sort of final question on that, because you mentioned about the settlement report from Amazon. What, because as a new seller, I remember when I first had that realization that, I can't just account for that transaction that comes into my bank account as my sales. For anybody that's like brand new to selling on Amazon, why can't they just take the figure that comes in their bank and allocate that as sales?
So the figure that comes into your bank from Amazon, the payout amount, is actually made up of all of the sales from that period, minus all of the fees that Amazon has charged you for that period, and then also potentially like loan repayments, and they might have reserved some balances. So all of that makes up the actual payout amount. So if you have a payout amount of, say, £1,000, then that doesn't mean you've sold £1,000 worth of product. You could have sold £1,500 worth of product, and then Amazon's taken £500 worth of fees, and their fees are not the same tax rate necessarily as your sales. So if you think your sales, say most of them are going to be 20% VAT, some of them might be zero rated if you've got some of these sales that go out of the UK or where Amazon's responsible for VAT, for example. So you'll need to work out those. And then you're also going to need to look at your fees. Some of those are going to be what's called reverse charged, where because Amazon's charging them from Luxembourg, because that's their main entity, then that's an intra B2B service supply. It sounds complicated, but it basically just means because it's going from one business to another business and it's different EU or previously EU and EEA countries, then nobody pays the VAT, so you don't pay it and they don't reclaim it. It's just like you both account for it. So it's what's called reverse charge VAT. Yep. And then you'll have some fees like advertising costs where they're from the UK marketplace, where it's billed from Amazon's UK entity. So therefore they are 20% VAT. So you've got a mixture of VAT in the fees and a mixture of VAT in the sales. So if you literally just take that total amount and say, right, okay, £1,000 of sales, I'm going to pay 20% VAT on that, job done. It's not going to be right, 100%. So you're going to end up more than likely overpaying VAT because it's like, that's just not how it works. So yeah, if you're a new seller, then you need to be at least separating out your sales and your fees. And ideally you need to be separating out your sales into what tax rates were actually applied when Amazon took the money off the customer. Because you don't really want to be paying VAT on sales where the customer hasn't paid you the VAT in the first place, because then it's just coming out your bottom line. Absolutely. If you have a product where you make 25% margin and then you pay the 20% VAT on behalf of the customer because they didn't even pay it to you, and you shouldn't even really be paying it, now you're making 5% margin. Why would you want to do that?
Absolutely. And you are on your website, there's documentation for a lot of this stuff, right? You write up the best practices and people can learn about it on there as well.
Yeah, so we've got a website, we've got a help site called help.linkmybooks.com, and that's got loads of like getting started articles, loads of information around VAT, about Brexit, about how it specifically works for Amazon and how it specifically works for eBay, and there's loads of like screenshots and also videos going through everything basically, so you can learn quite a lot on there. But the good thing about Link My Books is it's just really intuitive, mate. So you come in and we guide you through everything. So at the step you're at, we will have either a video or a help article linked on that page where you can learn about that specific step. And we try and like, the support is really good as well. So we've got 3 customer service people who work for us now who are all accountants.
Oh, wow.
So it's not, they're just like, they're not, I say they're not normal people, but it sounds wrong. They're not normal people. They're not like everyday people. Is not, so they are accountants basically. So they know their stuff and they've been working with us now for well over a year. So they know the insides of like Amazon and eBay as well. They know everything about Link My Books, and they've got an accountancy background behind them, so they're not just answering the questions sort of thinking they know the answer, they know the answer. So, and they're like live chats between 8 and 4 Monday to Friday, and then outside of that you can send them a message and they'll get back to you within a day. And if it's a really complicated question, then they'll sometimes pass them to me as well, and I'll, with my background of like being a seller and having been Pan EU and obviously building the tool up, I'm pretty confident on some things as well.
Yeah, fantastic. Well, that sounds super helpful. Daniel, if people want to find out a bit more about Link My Books, you set up a special deal for our listeners, right? Tell us a bit about that.
Yeah, got an amazing deal going on. So if you use the code BRANDBUILDER50, all one word with uppercase, then you can get 50% off your first 3 months of a monthly paid subscription. The annual plans already include a discount, so we don't do it on those, but the monthly ones, you'll be able to get 50% off your first 3 months. And then if you like it, you can always swap to the annual ones afterwards.
Amazing. That's so good there. I appreciate you doing that for us. That's very kind of you. And people can grab that discount and the link. All the details will be in the show notes, the description below. So check that out.
Yep.
Listen, Dan, it's been amazing to have you on. Thank you so much for your time.
Yeah, thank you for having me.
And
sorry if I talk a lot. I tend to get told that I talk a lot.
No, I love episodes where the information's coming from you and I don't have to tease it out of you. It's good. I think that's really insightful. People are going to learn a lot and be inspired by your journey. So thank you so much, mate.
Yeah, sounds good, mate. Thank you for having me.
No worries.
Enjoyed it.
Well, what a great episode that was with Daniel. Seriously enjoyed that conversation. As you could probably tell, we could have talked there for hours. But make sure you do take up Daniel on his offer of the discount, 50% discount on LinkMyBooks for 3 months. The details are down in the show notes in the description below. You can check all of that out. And if you are enjoying these episodes, it would mean the world to me if you could leave a review on whichever podcast platform you're listening on, or subscribe on YouTube so you get notified of when new episodes are released. I've got another great episode coming for you next week. I'm excited for you to hear it. And remember, if you do want some help building your own brand, you can check out the links in the description below. In there is a free checklist, 99-step checklist, broken down into minute detail, all the things you need to do in order to get started with selling on Amazon and building your own brand on a similar journey to Daniel, my guest today. Link for that is in the description, with a whole host of other resources there to help you on your journey. All right, I'm going to go have some lunch and I'll see you in the next episode real soon.